Well, joining us now for our regular catch-up is Marcus Bogdan, who is the portfolio manager of the Switzer Dividend Growth Fund. And because he's an expert on dividend-paying stocks, I like to occasionally catch up with him and see what's going on. And of course, in reporting season, a lot's going on. Marcus, thanks for joining us.
Thank you, Peter. Good to be here.
Mate, let's talk about some of the releases so far. We saw a big one yesterday with the CBA, a couple of big ones this morning. So let's start with the CBA first of all. The dividend, did it make you smile as a dividend collector?
Absolutely, and it was ahead. Both the earnings and the dividend were ahead of market expectations, and that reflects the underlying strength of the CBA franchise, where they're delivering above system growth, both in home loans and business, and very strong deposit growth as well. So it was a premium result. Dividend was $2 plus a $6 billion buyback. And given the strength of the capital position of CBA, the expectation is that there'll be further buybacks going forward.
Yeah. So does the buyback directly affect the fund or only indirectly in the sense that the share price could be affected?
Well, it affects the share count, and so the number of shares that are issued by CBA, that share count will be reduced to around 4 or 5%, and that will certainly benefit the earnings growth for CBA going forward. So it's a net positive for our investors.
Okay. Today we also got news from Telstra, and Telstra clearly is in the fund, being a big dividend payer.
Yes.
What's the story there?
Well, importantly, they maintained the 8 cents dividend, and they also announced a $1.5 billion buyback, and that was from the proceeds from the sale of their mobile towers business. And for the first time in many years, that operationally you are starting to see some improvements there. Good strength there in the mobile business, and also very strong cash generation from the business, which underpins that dividend yield there of around 4.2%, fully franked.
Yeah. So at the moment, Telstra's been a great disappointer. But
yes,
at the moment, you're getting stock price growth and you're getting a solid dividend. So it's an overdue win-win situation with Telstra for you guys.
Absolutely. It's probably looking the best it has looked for a number of years. I mean, there's still challenges in that marketplace, but I think as an industry, there's much more rationality in the mobile players. And Telstra now are very, very focused on capital management and returns to shareholders, which is encouraging.
Now, Goodman Group is not renowned for its dividend-paying history, but you do have it in the fund, and it did report pretty well today.
It did. It's probably in the best position in terms of where real estate is. They're a global leader in warehousing and in logistics, and so they're a real beneficiary of digitalisation and this real push to online. And so they're delivering earnings per share growth of 10% plus per annum. They do pay a dividend to shareholders. Why we do like them is that they're absolutely in a sweet spot in terms of the new economy. They've got a very, very strong balance sheet, and they're a global leader in logistic warehousing.
Yeah, but its function in the fund, the Switzer Dividend Growth Fund, is more for its growth than for its dividend.
Yes, so and obviously the growth underpins the dividend going forward as well, which is those two things are always very strongly linked.
Yeah, some people might not understand, but you can sell a stock that has had fantastic capital growth to enhance the dividend that you pay to the unit holders.
Indeed, you can. Yes.
Yeah. Okay. So people watching this might be thinking, well, when does the Switzer Dividend Growth Fund pay out next time? Because clearly we're going through a period of great dividends, better than, even though I know you're a brilliant crystal ball gazer when it comes to what companies will pay, this is like you wouldn't have thought this a year ago that the dividends would be so good, and they are going to be good. When does the Switzer Dividend Growth Fund actually pay its next dividend?
Yeah, I mean, you make a really important point, because both earnings and dividends have been substantially better than where we would have thought a year ago. And we're seeing earnings growth of 25% plus expected for this results period. And that will be reflected in the dividend growth as well. And then for the investors, they get their dividends paid on a quarterly basis. So the next payment for the dividends will be on the 30th of September.
Okay. Well, when we created this fund, it was meant to be like a very safe, secure type of, albeit in the stock market type fund. And of course, the coronavirus took the share price or the unit price down pretty quickly. But I'm really happy that it's rebounded to the all-time high of $2.77 today. That's good to see.
Absolutely. And it's also important to note that in the portfolio, the composition around quality companies that have been very resilient earners, and that resilience in earnings is so important in maintaining and growing dividends. And so investors will be well aware of companies like Wesfarmers and Brambles and Woolworths and Coles that have been able to maintain and grow their dividends even throughout the COVID period.
Yeah, exactly right. Marcus, thanks for joining us. Talk to you in a few weeks' time.
Thanks. Pleasure, Peter.